Josh, why don't we start off with you? I know you're very bullish on the buybacks right now at a record year to date, over $500 billion in buybacks either authorized or announced. And you are a holder of J.P. Morgan.
I am. I think probably most of the growth in both buybacks and dividends is really going to come from a small group of sectors, and financials are in both categories. You'll see hikes in dividend rates, and you'll see hikes, I think substantial hikes in some cases, in the rate of buybacks. The number this year, just to give people some context, so far this year we have $560 billion worth of buybacks authorized for the S&P 500. That number can go up over $700 billion in authorizations. An authorization doesn't guarantee that that dollar amount of shares are bought back. It's kind of like the upper end of the range, but companies don't just make these numbers up from the sky. They have return expectations that are coming from the shareholders. So I think it's going to be a great year for companies when you think about total shareholder return, not overly focused just on dividends or just on buybacks, but that combination. And then you pair that with the fact that companies are growing their earnings at a rapid clip, and it gives you a good idea as to why the S&P 500 is off to a 15% start year to date in 2021, with a lot of positive catalysts still ahead.
All right, Weiss, turning to you. You own Bank of America, Goldman, and the XLF. Do you see these buybacks as a catalyst as well? And how much of a run will these create for the financials?
I do see a slight catalyst, but it's no secret. We keep seeing these stress tests, and they come out and they say, okay, we're going to buy back stock, because don't forget, their governors put on them a few years ago, and now they're catching up to it. From my standpoint, I think buybacks are great. Dividends, I'm less enamored with, because I'd rather see it go into investments in the company. And I actually think that's what you're going to see. But to Josh's point, this is one of the reasons why the market's up 15%. Because it's an expression of the confidence of the board and the management team that things are getting better. So to me, that's one of the more bullish signals you can have. But I'd love to see additional CapEx, which we haven't seen in really a very long time, talking about momentous CapEx. And I'd like to see more M&A, and I believe we will.
All right, Jim, you hold Citigroup and Goldman Sachs. What's your take on these buybacks? Are they a catalyst, or do you agree more with Weiss that they're a slight catalyst, a slight tailwind?
Yeah, Frank, I think I'd qualify them more as support than a catalyst. But if you take a look at a stock like Citigroup, for me, the buybacks present the best of both worlds, because as they buy back shares, they're buying them back below book value, which means they're immediately accretive to the balance sheet. And Citigroup really buys back shares. In the last expansion, there were years where they shrunk their share count by 10% year over year, which means my ownership in the earnings stream is getting concentrated. Now, if that isn't a catalyst, if it doesn't move the stocks higher, that's okay, because they're buying back more shares at these lower accretive to balance sheet prices. And if it does move the shares higher, that's what I mean by the best of both worlds. You can't do that unless you're generating cash flow, which companies like Citigroup and Goldman Sachs are.
Kerry, any last thoughts? I know you don't own any of the banks, but any thoughts about whether this is a catalyst, slight tailwind, or are you more in the Weiss and Jim camp?
Charles Schwab is a bank, but I don't own any of the big banks. I would say that over the last 25 years, we have repurchased half of the shares that were available to public shareholders. And that has been one of the key catalysts for the market moving higher for decades now. It's been, along with Fed, keeping interest rates down, one of the two key drivers many people have stated about the market. And so if it happens to the extent that people are now describing as a positive for financials, technology, other companies that have free cash, I think, of course, it's a positive for stocks.